All right, I think we are live, and what I wanted to do was to kind of leave a mental journal of today's trades, where I messed up, where I executed well, and what my thought process was. So I journaled this out in my book, but I did also want to create some levels of redundancy to try and also start these little quick video recordings going over all the positions, everything, the thesis behind it, why I decided to do the positions that I did, and so on. So I was looking at gold, and at this point in time I trade at about 2 a.m. Eastern Standard Time, and then during the New York session as well at about 9:30, 10ish, into about the first hour, 2 hours max, roughly, as that's where I usually find the best and the cleanest price action to try and take advantage of this. So if we were to essentially go back to what it looked like before that 2 a.m. session, this is all you kind of saw. And you can see I already have an analysis here with the cusps, where we're continually making lower highs, and I'm thinking, all right, maybe we'll break down, and maybe we'll see a movement like so. Let me just change that, or no. Sorry, put them boop. I'm gonna put that there and put that boom, like that, right? Maybe we'll see a movement like so, or maybe we'll get even a better of a movement and see more movement like so, right? Pushing it back to this 1968.50 that I have. If I go to the hourly, we can kind of see where it acts as a label, a price label of stability in that range, right? So all in all, I was looking for that as an opportunity. Excuse me, sorry. And that was kind of what happened. So now this comes to where we're at 2 a.m. now. So this is the 2 a.m. candle. And at this point, we've already started to kind of curve down from this level of support where it was prior. And I kind of missed this because I did not want to enter as it wasn't 2 a.m. yet. I watched it. I was up all day, basically, just saw it. I'm like, all right, I think I'm just going to hold out and wait till 2 a.m. to see if volume kicks in and allows a better move to occur. And then 2 a.m. does hit. And if I go to maybe the 15 minute, now 2 a.m. does hit, and it hits really well. And we start selling about 50, 60 basis points all the way down to the bottom, roughly here. And this is where I caught a very solid move. I was able to actually wipe out yesterday's losses, putting me up about 3% or so, or like 3.5% on the account. And that was a great position where I was looking to emulate what occurred here at the break of this level as well. So we came up, it tested it. I actually got a short, and I set my stop just about here before the top of this candle and got stopped out, and then ended up re-entering that position. So I opened up this position, lost some, and then saw the continuation occur, and that was able for me to capture this piece here roughly. So able to capture this piece here, right? So not a 3-to-1, not the best of trades, but that's basically kind of where I focused on to be able to capture that early 2 a.m. Then shortly after, I was looking to see if we will maybe do a little bounce here, like we mentioned here, but then continue the selling down into the 1970s. And that was what I was hoping for and kind of looking for. And all through here, I traded chop and breakouts on a much smaller time frame, which looking back at it, I should have done something completely different. I should have left it alone at this point, and kind of just let it do its thing. as no real movement there was a true breakout and true continuation of selling, and I lost a decent amount of funds through this period. So I think at this point I had gained about 3.5%, and then I lost about like 1.75, or maybe about even 2% at this point. Just giving away, just trying to prepare and load up positions, waiting for the continuation or waiting for a bounce, and taking both sides and just trying to see where momentum was going to ride it towards. And that was definitely a mistake on my part. And I need to get better on how to trade these angles here, or just get better on how to leave these types of price action alone entirely and wait for the better positioning to come along. And yeah, so at that point, I'm basically barely up at this point. Maybe I'm up like 0.5%, break even at this point kind of scenario. And I just say, you know what, forget it. I'm going to leave it at that, and I'm going to wait till the morning comes through. So all this continuation chop occurs while sleeping. I get a quick nap in. I'm up again by about 9:30. As soon as it hits 9, I'm like, all right, this is what's happening with price. Let's see what's going to happen when market opens. And as soon as market opens, if we come out to here, the U.S. trading market opens. I see it's pushing up to here where we see this resistance, this kind of like neckline that was previously there kind of form as a scenario now. And now I'm kind of like looking through this like, all right, this could get rejected. And then volume comes through in the first 10 minutes. And then we see selling, almost to the extent where there's a gap on my screen. And we see selling. So I quickly hop in, and I'm looking to take advantage of essentially the same trade. Essentially the same trade I did earlier that morning at about 2 a.m. But the whole time I'm just moving along with the trade, watching price action, catching this move, and also looking to see where it stopped prior. Again, this 1970, 1968 range was where we saw, the ending of the selling and the cusp forming. So this is where it's really intriguing me now for me to start taking profits. Start taking profits roughly about 1974 range, 1975, and then I end up getting stopped out. So that ends up happening. We quickly cusp back up towards 1985s, 87s. I don't take that position because at this point I had just exited the shorts. I like to give myself a little bit of a breather, to cool off, let the market kind of figure out what's going to do next, and then go back in if another opportunity presents itself. But yeah, so I ended up taking that, and at this point I'm potentially up now on the day at about 7. Let's check my notes real quick. At this point, I'm up at about 7.5% in totality. I was able to make back a lot of the losses I lost within this chop, because within this range, it was a lot of quick exits. That was what saved me, right? Keeping my stop losses tight. Okay, I'm wrong. Boom, leave it. Okay, I'm wrong. Boom, leave it. I'm wrong. Yep, taking losses there. 5 basis point hits, 7 basis point hits. And then in all reality, we're capturing 50 basis point hit wins to, 50 to 70 basis point hit wins. So me capturing maybe 10 to 12, 5, 7 basis point losses doesn't really matter to the extent when I'm been able to capture 50 basis point wins, 60 basis point wins with using great size. So that was most of today's trades and movement based on this scenario, using a short bias based on the longer term chart, right? If I come to the hourly and the 4 hours, it starts to look like we're getting weaker and weaker, roughly speaking, with a good strong support still at the 1970s. And then ultimately after that, I started to peep that, we may potentially have a double cusp. double cusp. I love that chart formation, right? And this was what interests me really well here. So boom, we drop down heavy, we bid back up, we drop back down, but we don't get back to the lows of the previous aggressive selling, and we get a double cusp. This is like a double bottom kicker, if you will, where the second low is much higher, or is higher than the previous low. So that way I can kind of view it and say, well, hey, this may not be a move that like happens in the next 15-30 minutes like this move, or like this move that's more volume driven because of the timing and so on, but it will take time. And I just entered a few lighter positions here, and I placed my stop just below these lows, and aimed back up for this equilibrium state at the 1980s. And it went back to sleep ultimately. Did that and came back out, got another 10-12 basis points on both of those positions. Great, overall padding, if you will. Not a main position, not something that I'm actively managing while in a trade, but something that much lower risk, not concerned about getting stopped out, nominal money being lost, and interesting and kind of padding money that would have been won in this case, because it just sat there and kind of pushed through and collected about another 25-30 basis points at a much smaller risk tolerance and risk size, kind of allowing me to look at that. And also the main reason that allowed me to even take this position or want to take this position was the fact that I was already up 7% on the day, right? So I know that, if I let's say, for example, I made $100 or so here on this potential trade, $140, something like that, $130, and then in this position I had great size within it, did really well. I'm up another, and then I go back. After losing a decent amount of money, maybe being down $40, down $50 in this range, and then coming back and then boom, hitting this type of movement, and being able to capture, and then saying, oh well, now I'm up a good 300, I don't mind taking a potential loss on this position, targeting a loss of maybe $25, $20, and maybe winning $60-$90. Like that's a nice padding in the realm where I'm risking $25, maybe $30 after being up 300 and so, and ultimately ending the day in profit about just above $418 in this overall time period of price movement, right? So all this price movement here was what I was able to take advantage of and turn it into a profitable day, right? Not very good on the win percentage, I would say. A lot of these losses definitely took it, but the risk reward really made up for it, because one trade and I was back deep in the green, ending the day about 7.7% green on the overall, and locking in about $420 in profit after looking at this. Now, the only other thing that I kind of want to mention is that has served as my cheat code, if you will, is, right, so the price of gold in this reference is under leveraged to the value of the US dollar. So in the case where gold is depreciating, that means that the other side of the coin, the US dollar, right, because it's gold spot versus the US dollar, if you see the watermark here, I go to the DXY to see the dollar index now, and I can see that in cases where the value of the dollar is increasing, then the value of gold will be, sorry, that's Bitcoin, wrong chart. Then the value of gold in the other case will be then decreasing. That allows me to kind of, act as a confluence, increase my confidence and the probability of the trade panning out in my favor. Because while I'm looking to short gold, I'm also seeing strength in the dollar, which is overall great, right? So now if I go to the longer term period on the hourly for the dollar, we see this pennant, right, where we've made, again, kind of lower highs, but the overall price movement has been something entirely interesting, allowing me to use these patterns and use these trends to get better and make better risk management decisions, and come to the table much sharper, all while being able to watch and see where price is going, and just, again, be better and make better overall decisions. So that's been a big key in learning how to trade gold better, as I've gotten better, right? And these cusps, these trading cusps where the kicker comes in, or right, because for example, if I come back to history, I believe I traded this cusp as well. Double break of the neck was a push. Boom, 30 basis points there, 30, you know what I mean? And I think on a smaller scale, there was another cusp here. Maybe if I come back to the 15, zoom out a little bit, let's see what we got here. Yep, another scenario, right, where bottom cusp. This is a double bottom kicker. Boom, break of the neckline. Boom, another, what is that, 20-25 basis points roughly, right? Knowing that is the overall movement, that is the movement that you're trying to catch through this. And some other cases where you just see general double tops, right? Break of the neckline, great push, huge push, 160 basis points down to the price below. And not only that, but head and shoulders, all the different cusps, if you will, is kind of where I'm currently targeting and what I've been looking at to be able to help get better overall with pricing, get better with entries, get better as an overall trader. So that's kind of my wrap up for today's positioning and where I sit in today's positioning. And that's all from the agent. Aside from that, I wish you guys a great Friday. Happy Friday, April 21st. Pour a shot for me, for the agent. I'm going to kick back and enjoy the weekend, and I'll see you all in the future. Peace.